Good morning, everyone. Welcome to Windsor Brokers live daily market outlook for Tuesday, 25th of September 2012. Overall, a negative tone for the single currency persists as Spain comes in focus with some positive tones heard this morning from Germans data showing the consumers' confidence still stable, at least unchanged, and the one from France also being unaffected so far. That gave some initial boost to the single currency that regained the 129 handle slightly above during the early hours of European session, but overall sentiment for the single currency remains quite negative, and the pair is basically still in its near-term down move from 131.70 peak following yesterday's brief trip below 129, and posting a marginally fresh low this morning at 128.86, keeping more focus at the downside ahead of today's meeting that will be between German Chancellor Angela Merkel and the ECB President Mario Draghi, and then of course the Draghi's press conference will follow in the afternoon. As said, the German consumer morale is keeping steady heading into October with the 5.9 release seen this morning compared to 6.0 the forecast, and the 5.9 in the previous month, still holding the ground, with the French one also, as said, being positive. The forward-looking consumer sentiment indicator, based on a survey of around 2,000 Germans, stood said at 5.9 in October, unchanged from September, and matching the consensus that was approximately at 5.9 to 6, showing that supporting the expectations that domestic demand in Germany will prop up the traditionally export-driven German economy, as demand in the Eurozone, where many states are implementing tough austerity measures, slackens and the broader global economic environment weakens. Set Germany as number one economy in the Eurozone, and quite positive tones coming from there, despite yesterday's quite disappointing IFO data, still keeping some balance in the current crisis, where the southern part of Europe, of course, is putting quite high pressure on the overall Eurozone economy, and of course the Spain that is coming now fully in focus with we mentioned yesterday approximately 60 billion euros required for as immediate aid for the Spanish economy, but Spanish officials still keep saying that they will do it slowly and gradually, instead of some sort of quick or panic reaction. The markets, as said, euro is still in the downward movements, while sterling keeps its positive tone despite some signals of possible stronger reversal, still holding ground, and this morning's rally on the opening of European session keeps the near-term focus in the upside, currently at around 162.50, following two brief dips below 162.100 that were threatening a reversal, but the pair still remains quite well bid, and it's still within the near-term consolidative sideways movements, limited by 61.62 on the downside and 163.08 on the upside, as a brief break above 163.00 did not capitalize. The pair did not capitalize in this, and still consolidating. More details of this we'll see in our technical part, with dollar yen holding below 78.00, signaling that further extension lower is quite likely, while dollar Swiss remains quite well supported and holding just above important 94 barrier. Some support was seen on the commodities as crude oil regains 92.00 level following yesterday's dip to 91.05 that threatened retest of 90.95, but still overall picture is quite weak and sees not much potential at the upside. With the yellow metal holding around the 1765 off its recent lows and a strong base at 1750. I would say still in the sideways range trading, but near-term structure remains slightly aligned towards the downside, and it seems that at current configuration, the yellow metal might be losing ground at this point. Of course, if we don't see the break below initial and break point, initial support and the break point at 1750, then we'll see more sideways movements. Otherwise, a stronger reversal could be quite likely if we lose the 1750 support. From today's calendar, as said, the German consumer model already came out along with the French one. 5.9 was German one. We don't have basically the release for a French one, but still also the Swiss UBS consumption indicator was released this morning and came slightly below the previous release. 1.3 was the release today compared to 1.48 of the previous month. Still to come the mortgage approvals from UK. 28.4 thousand is the forecast. That is unfortunately not written, and the same like the previous month, July's release. And that was basically all from the European side. Across the ocean, Canada kicks at 12:30 GMT with the retail sales for July. 0.2% is the forecast compared to minus 0.4%. This is monthly release in month of June, while core retail sales are forecasted at 0.3% versus the same one, minus 0.4% in the month of June. S&P composite 20 metro areas home price index for July from states comes at 1300, and it's forecasted at 1.3% compared to 0.5%. Quite optimistic forecast with the U.S. Richmond Manufacturing Index for September due at 1400 GMT. We have the forecast minus 9 is the previous release. At 1400 also is the U.S. Home Price Index for month of July monthly release. The forecast is 0.4% compared to 0.7% of the previous month release. And we have the speech of Mario Draghi. I don't have the time. It's his press conference, and then we have the U.S. consumer confidence due at 1400 GMT. 63.1 is the forecast compared to 60.6, and basically that would be all for today from the economic indicators. And not to spend more time in this, we're going to move to the charts and see the technicals and the outlook for major currencies and commodities. Starting with the single currency, it's still in the downward move of 131.70 as daily indicators started now to point lower, signaling some sort of stronger correction of 2 months rally from 120.42 that peaked at corrective rally that peaked at 131.70. Back to the near-term outlook, as the pair this morning posted briefly and marginally fresh low at 128.86. The down move from 131.70 remains intact as series of lower lows and lower highs define this trend. Following yesterday's brief corrective action from 128.90 to 129.52, where the descending 55 days on the hourly chart moving average limited the gains and capped the upside. This is now acting as our initial resistance. While any move any stronger corrective action requires a regain of minimum 130.00 in order to prevent immediate slide lower and allow for some stronger corrective action. 4-hour charts are well in the negative. 4-hour chart, indicators are well in the negative territory, all pointing lower, with the 55 days moving average again capping the upside. It's important to mention that 20 days exponential moving average is now descending and looking for a crossing below 55 days. That will be quite a good bearish signal for a further extension lower on the downside. We have a series of good supports starting with the 128.54. This is the low of 13th of September, along with the 50% retracement of 125 to 131.70 at 128.35, and then 200 days moving average at 128.25, along with the larger, I have to see it on the weekly, larger bear trend line from 134.85 yearly peak through 133.79 and 132.82. This is the broken trend line. This is the broken trend line. We have to go back to the daily chart. Broken trend line currently standing at approximately 128 zone, and basically break of these levels, quite strong support at 128.25 and 128.00 would be confirmation of the top at 131.70, and of course that will open way for a extension lower with the 38.2% Fibonacci retracement of larger 120.42 to 131.70 ascent, seen as the next target on a break below important 128.25, 128.00 support. As said, on the upside, 129.52 now offers initial resistance, and any stronger action needs to clear minimum set 130.00 in order to ease the current bear pressure and possibly refocus the upper levels. From the fundamentals, I said most of the things related to euro have already been released. Now we'll be looking for US indicators that might give some fresh direction and more clues about euro's movements, but to mention that overall sentiment remains quite negative for the single currency, and sees not much potential towards the upside. Conversely, the sterling is still well supported, as shown better in the 4-hour chart, despite a brief probe above 163.00, our key barrier, and this is a very important level as shown on the weekly chart. 163.00 is the peak of end of April 2012, and also is the top of the long-term congestion defined by 153 and 163. Basically, break above these levels is to open way for a fresh phase higher, where we'll be facing quite not far from these levels. 165.17 is the long-term downtrend of 170.41 2009 peak. Now, not to go too far, just to mention that 163.00 acts as a quite good resistance, and break here is to signal a fresh phase, a fresh bull phase for the pair. Back to the near-term studies, hourly structure is now regaining strength as studies move into the positive territory on the fresh rally on the European opening, looking again for test of the upper levels at 162.70, 162.94 and 163.08 as a final target on the upside. As said, the consolidation is still well supported, as the ground was found yesterday at 161.80, contained by the 55 days exponential moving average, ahead of a previous low of 20th of September at 161.62. That marks the floor of the current consolidation range. More warning signals come from the daily chart, where the studies are quite exhausted, yet no firm signal of any reversal, despite being in the overbought territory. And the double doji, basically triple doji, we have 1, 2 and the gravestone doji 3, signaling a possible exhaustion of the current strong rally, I would say medium-term rally from the beginning of June 2012. with the possibility of trend reversal seen signaled by doji candles. However, break above 163.00 and 163.08 is set to turn the focus again higher and erase all these signals in favor of a stronger move higher. On the other side, if these signals prove to be correct, then we might expect some stronger reversal with the break below 161.62 seen as a signal and a trigger for stronger reversal, with the break here to attract immediately 161.0038.2 Fibonacci retracement of the up move from 157.69 30th of August low to 163.08 peak of 21st of September 2012. So far, the near-term price action remains quite good support despite some negative signals, and the pair continues to head higher. Of course, the release of UK data at 8:30 GMT will be another factor affecting the current cables price action. And dollar Swiss is slightly slowly but gradually but firmly losing ground after upside rejection at 79.21. This was the corrective move of 77.12 13th of September low. The gains were capped at 79.21. This was 4-hour Ichimoku Cloud base, as well as 200 days moving up, daily Ichimoku Cloud top, and the 200 days moving average just ahead, currently at 79.30, that capped the upside, with the more negative tone seen on the daily chart, as all studies are in the negative territory, and the moving averages we have that cross at 79.24, 90 days, one crossing below 200 days, one seeing more potential towards the downside as long as these levels stay intact, as the pair broke and closed yesterday below 78.00. This could be quite a bearish signal for possible extension down towards our key supports at 77.12 low of 13th of September, as well as 77.00 as around the figure support, with the negative tone also dominating on the 4-hour chart, as 20 days exponential moving average crosses below the 55 days one, and similar we have on the hourly chart, where the 10 crosses below 20 and 55, and the 21 crosses below 55, maintaining the current downtrend firmly. Nothing from recovery to be expected unless we see regain of minimum 78.36. This is 21st of September high, and the previous corrective consolidative range top. Otherwise, more pressure is seen towards the downside, with the 77.12, 77.00 expected to come in the near-term focus. As said, regain of 78.36 minimum, and then 78.50 could be a trigger for possible reversal towards important barriers at 79.00 and 79.20.30, and only break, basically only break above these levels is to provide the relief for the pair and prevent from the further losses. Otherwise, likely scenario, as said, would be reversal and retest of 77.12, 77.00. Of course, need to mention again that Bank of Japan is ready to act at any time in order to prevent again strengthening yen that happened a few times last year, and most likely some levels below 77 could be seen as a trigger for the intervention, as they stated their readiness to act at any time in order to prevent further strengthening of Japanese currency that is directly affecting the Japanese economy. The dollar Swiss near-term recovery action of 792.37 remains well supported, as yesterday's rally peaked at 93.90 and was interrupted by corrective action down to 93.40, slightly below our initial support and previous peak at 93.54, where the 55 days exponential moving average limited, also shown on the hourly chart, limited dips. Current rally, this morning's rally higher, so far is showing that it's running out of steam in the near-term action, as gains were rejected at 93.83, but still a positive structure seen on the near-term studies, although the hourly ones are already pointing lower, and the loss of momentum could be quite important factor at this point. I would say loss of 93.40 could be the first signal, but if we lose 93.00 and the important double bottom at 92.83, along with this is the trend line support, then we might say that current rally is sideline, and the possibilities of further extension lower are quite high. On 4-hour chart, the indicators are still well in the positive territory and pointing higher, but if we don't see the break above initial 93.90 and the more important 94.00, 94.16 resistance zone, where we have the round figure resistance, 50% retracement at the previous peak, also reinforced by 200 days moving average, then most likely scenario would be lower top and extension of the larger down move of dollar Swiss from 99.70, with the latest rally seen just as corrective. Failure to regain 94.00 could be quite bearish and could signal further extension lower, while on the upside clear break above 94.16 is to confirm the near-term bottom at 92.37 and allow for a stronger corrective action. Quite a negative tone, but signs of reversal seen on the daily chart as studies are emerging out of the oversold territory could be the supportive factor. But again, to repeat, if we don't see break above 94.16, then chances will be minimized for some stronger corrective action. And November crude oil is, I would say, the near-term price action is still in the sideways consolidative mode following the latest dip to 90 and 95, attempting to build a double bottom at this point. Confirmation of this, of course, requires a regain of minimum 93.82. This is the previous peak of last Friday, with the initial dynamic barrier seen at 92.67, 20 days exponential moving average, while break above 93.82 and regain of a more significant 94 zone, previous strong support and base needed to prevent the oil price from further sliding. However, negative tone is still seen on the daily chart as indicators dipped into the negative territory following reversal of 100.79 break, 172 peak break below 200 days moving average, and loss of important 94.00 base, as well as 93.22 previous peak, dipping so far to 90.95. Any failure to regain 93.82 at this point could see increased risk of retesting recent lows at 91.05 and 90.95, break of which to open another dynamic support at 89.78, 90 days moving average. Before this 90.00 as a round figure support would be seen on a break below 91 support. As said, regain of 93.82 is to confirm a near-term double bottom pattern. That could be quite a good signal for some stronger recovery. But again, unless we see regain of 94.00 and some Fibonacci levels 94.68 and more significant 97.00, where 61.8% retracement, that will be good signal for a possible reversal. We will turn focus higher and the signal possible reversal up to the psychological 100 level and the 100.72, the recent peak posted on the 14th of September 2012. And finally, we're going to take a look at yellow metal to see, as said, still a sideways movements with no significant action seen as the yellow metal consolidates its recent strong rally. The latest leg higher was from 416 46, 31st of August low, where the yellow metal gained from 1646, peaking at 1786, just ahead of our important resistance zone and the upside targets at 1790 and 1802. These levels are seen as a break point, and a break above here would very likely reattract and refocus record high of yellow metal at 1920 posted in September 2011, just a year ago. Near-term action still shows the neutral mode as the price remains entrenched between 1750 and the 1786 range, with the descending studies still seen on the 4-hour chart, still keeping more pressure towards the downside boundaries of the current rally, with the 1750 base seen as a key support and the break point. It's currently reinforced by 55 days exponential moving average. The break here that also marks 23.6% Fibonacci retracement of 1646 to 1786, seen as a break point for possible stronger corrective action. On the downside, immediate support is 38.2% retracement at 1733, along with the trend line support at 1720, break of which, along with the 50% retracement at 1716, could be seen as a trigger for some stronger corrective action, as the price currently attacks the lower support of the linear regression channel. We have to watch as sideways and range trading does not give any direction. We have to keep focus on the downside at 1750 and on the upside at 1787. Break of either side is to define the near-term direction of the yellow metal. That was all from me for today. If you have any questions, please, now it's your time to submit them. Okay, we have one of our favorite questions, Aussie dollar against US dollar. It's been some time again to take a look at this pair. Let's see the 4-hour chart. Let me just wait until you see the screen, okay? The 4-hour chart shows near-term sideways movement with the range defined 103.67 on the downside and 105.18 on the upside, as corrective pullback of 106.23, recent peak posted on 14th of September, found base at 103.67, approximately between 50 and 61.8% retracement of the main rally from 101.65 to 106.23, more neutral but still negative, I would say negative to neutral mode is seen on the 4-hour chart, as the price is still holding below the moving averages, and indicators are still in the below their midlines, seeing more focus towards the upside. Of course, break above 105.18 previous peak is to regain to signal a regain of strength and possible extension higher. That will also confirm the higher low at 103.67. Conversely, loss of initial support at 103.85 is to directly focus 103.67 and probably to allow for the stronger retracement, with the 103.40 seen as the next target that marks 61.8% Fibonacci retracement. Daily structure is, I would say again, we can define the range at this point On the downside is 101, approximately 101.70, and on the upside 106.20. This has been established from the beginning of August 2012, and still the pair is still entrenched with this within this trend. More focus at this point seen towards the upside, as studies are quite positive on the daily, and the 200 days moving average currently at 103.38 is underpinning the current action break. Below this level, of course, would be a factor of for further weakening, with the 55 days moving average currently at 104.09, holding the downside for now. Again, break above initial 105.0020 is to refocus the range tops at 106 zone, and probably to extend the current still uptrend of 95.79. This is low of 1st of June 2012. Any further questions? Seems no questions for today. In that case, again, I would like to thank you all for being with us. Expect to see you tomorrow morning at the same time, 7:00 GMT, 10 o'clock local Cyprus time. Until tomorrow, wish you a nice day, and of course, as always, very good and very successful and profitable trading. Of course, if you follow our comments and analysis, you have a great chance to make good profits. Thank you again, and see you tomorrow. Good luck.